been pretty stable. No, are people outbidding each other? People still losing houses, so it's almost
not as much.
Not as much.
Yeah.
You told me in Rockland that before it used to be crazier. Now it's maybe 6, right? Or it's still
insane.
Still, for like our previous client the other day that we just closed, how many people were in the bidding, in the running?
For houses we bid on, probably 10 to 15 each.
10 to 15
Each house.
Each house had
10 to
15 people
offers,
bidding.
10 to 15 offers, yeah.
Wow, that's crazy. So I thought it was more like 6.
No, not in Rockland. Rockland's on fire.
Oh, Rockland's on fire.
Rockland's still on fire. We had to go 50. Well, I ain't gonna say that. But we had to go way over asking price to get that house.
Really?
The appraisal came in higher still than our purchase price.
Right. Still, and we had to put like you said, they had that appraisal gap, but it still didn't work. I mean,
we didn't need it.
We didn't need it. That's what I meant to say. Yeah, we still didn't need it, which was good. The clients was telling me this is something. Sometimes the clients want for the appraisal to be lower, so they can purchase at a lower price, so their monthly payment is a little bit less. But I tell them what happens. It's not as simple as that, because when then the appraisal comes in lower than the agreed price, you have to go back to the closing table, not to the closing table, to the negotiation table, hoping that the seller is willing to go down to the price.
Yes.
Or worst scenario, you have to put up that money of that difference, right?
If you want to move forward, depends on what you have in your contract. So what's called an appraisal gap contingency.
Right.
So in case the appraisal came in lower than our purchase price, we agreed to pay up to $10,000 to get towards that final purchase price that we originally offered.
Right.
So depends on the situation, depends on the market. The market over there in Rockland County right now still on fire. We just don't have enough houses, way too much demand. So you're getting 10 to 15 bids per house most likely. As long as it's priced right and marketed well, it's gonna get a lot of interest. Down here in New York City, we've slowed down compared to a lot of our surrounding suburban areas.
Are people just moving out the city probably, right?
I think we still got a lot of people who have discovered like other parts in the metro area near New York City post-COVID. So I think that's part of it. 2 is just our prices are probably higher than a lot of our surrounding areas for similar properties. And if the house in Rockland, for example, the yard is like probably 4 times the size of my yard. You're not gonna get that acreage down in New York City, right? The houses are bigger. You're fully detached. You're gonna have parking. In New York City, you might have to give up on some of those things. So you're paying more for the house, most likely. You're giving up certain things that people really like, and so now we've lost some of that demand.
The only thing that I have against properties like outside of the city, is that I feel like you throw more money away in the terms of property tax. I feel like in New York, at least, in New York City, the taxes are a little lower. Sometimes you can find a single family with $300 in taxes a month, right?
Yeah,
so most of your payment is going to your pocket, your equity is going to the loan. So you get to keep more. When you're going to Mount Vernon, for example, New Rochelle, you're paying $20,000 in taxes, and your mortgage is probably $20,000 in taxes a year.
Yeah.
And your mortgage is probably what, 1/5 of that. So you're paying yourself a lot less. So more money goes into your pocket. I mean, when you're buying with lower, in a place with lower taxes, that's where you pay it off by tranquility maybe out there. But I don't know. I like to keep my money with me. You know what I'm saying?
But let me tell you what people are thinking. At least what I've heard from a lot of my clients. They like a lot of the school districts in surrounding areas, so
that's true.
They're funding, their taxes are going straight into the school. They may not be paying an income tax like we are in New York City, also Yonkers. So they're saving on that end. But it is
that's a good point, right?
Yeah, it is a big deterrent because it does lower your purchase price, and then the mortgages will be more going towards that escrow, that property tax, which is really having a big effect on people. I don't think a lot of folks realize. I was talking to a buyer the other day. They're looking to purchase their first home. And I was like, she told me I'm looking between Bronx and Westchester, and I was like, has anyone ever told you the difference just in property taxes alone and how that can impact you? She said no. So we went into basically what you were saying. We went into that whole wrap. She's like, wow, I didn't know it was that big of a jump. I was like, yeah, your star rebate, assuming you qualify for it, will probably be higher in Westchester, but it ain't making up that $8,000, $10,000, $12,000 difference that you're paying extra in those property taxes. And remember, your property taxes will keep going up. Most likely year after year after year. Your mortgage is going to be going down over time as you're paying it off.
Right, it's true. I feel like it's an understated or not talked about enough part of the home buying process, the property taxes, man.
Definitely.
It's just like the closing costs that people, oh, I got 3.5%, I'm ready to buy a home. Wait until I hit you with the 6% in New York City in closing costs, which is, it's messed up. Even for me, when I'm purchasing a loan, I see this person with full of enthusiasm, ready to buy a home, and then all of a sudden, well, you need $35,000 more. You know?
And they're not ready for it.
They're not ready. It's tough to save up money, as we all know, in New York City. We live in paycheck to paycheck.
A lot of us.
A lot of us, you know. And so I get it.
I say Connecticut is what's one of the reasons a lot of my clients are starting to like explore more Connecticut, because you could be 30 minutes from the city, just like in Nyack and Rockland, for example. But now your property taxes, instead of 15 or 20,000, might only be 6 or 7.
Right, it's a big difference.
Not only now, the difference is now you pay an income tax in 2 states if you're working in New York and then living in Connecticut. Talk to your accountant. But I just had one client, for example, he bought this place in Greenwich. We saw a house that we had bid on in Harrison and Westchester. The property taxes for that house were $20,000 more than his house in Greenwich. And I was like, oh, man, I ain't no accountant, but I can count that. You probably still gonna save money going to the place in Greenwich.
Right, it's true. And talking about like affordability and all that, we have to get creative now in this market. You know, finding ways to get people into houses, because obviously the rates are higher than they're higher than before, right? Before we had 3s and 2s, even though that was more, it was an anomaly. We were during a sickness, a pandemic. You know what I mean? So those things don't come very often. Those rates only come often when there's disaster out there. During the 2008, during the recession, those rates, I imagine, I was in high school, I think. So, somebody look up that data.
I was in college.
Somebody look up that data, and you probably see that they were in the floor. That because nobody's purchasing, so the government has to stimulate the economy somehow. So now the rates are back in. Some people might say normal, right?
Yeah, 6, well, we're at 7, right? 7 right now.
So yeah, right. With at a par rate, meaning you don't pay extra closing costs, we're in the 7s for sure. If you got great credit scores now, I used to say back in the day credit scores weren't the most important thing, but now it's becoming a very major attribute again. Because it's a big swing between a person with a good credit score, let's say 740 and higher, to somebody in the 6s. Is a big swing. You might be looking at 7.6. And if you have a good credit score, you might look at it 6.25. Some people could dip into the 5s still, believe it or not.
Nice.
Yeah, so it really helps to clear those debts before you get into. Lately, I've been, something that I try to do now, that as a loan officer, when we try to get you ready, it's just not about. Of course, we want you to get the home, but if you can't get the home at that time, we try to get you ready. So one of the major things is that we can do is take a very good look at your credit, review it, almost as good as a credit repair guy, you know what I mean? We do it as much as the same without that promising of taking out, oh yeah, I can get you. I'm gonna send a whole bunch of letters, and then we're gonna get you hooked up right. No, we give you the real logical way of getting rid of things. So it's becoming very important to do that as a loan officer more than ever, because you want to get I have a refinance client that when we started, she was in the 679 on the dot. And we were going to get into, she was able to get the refinance because she wanted to cash out for some projects. But I told her, listen, it might be worth to wait 3 weeks only, pay this debt right here, try to get under the 10% utilization rate. And her credit score jumped to 726.
Woo!
And her interest rate dropped almost a 1% point. She's saving herself $400 bucks.
Dang.
Amazing. It's really important, man.